Joseph, let me ask you a personal question.
Okay.
What are you earning on your bank account
Oh
here
gosh, that is a personal question. I don't even want to answer that. It's too painful.
So it's zero, roughly, ballpark. If your
Ooh.
bank account is like my bank account, you're earning roughly zero.
Yeah, not great here in the West, obviously.
Right. So if you're prepared to move to Beijing, say, you can deposit your money with the money market fund Bao, which is owned by Alibaba, and just like that, you're earning 6%. So how does that work?
Yeah, it's kind of like a magic trick, isn't it? I mean, because again, even if we did move to Beijing and put the money in a Chinese bank deposit instead, we couldn't get much more than 3% for a year. You know,
By law.
Yeah,
Right.
like it's regulated the hell out of. But then you get Bao comes along. I mean, we've probably got the tones wrong in how we're pronouncing it.
Right.
But anyway, and it has a workaround because about 90% of its kind of assets are going into interbank deposits.
Right.
And when a Chinese bank cannot offer a retail investor much more than 3%, when credit is tight there anyway,
Right.
they probably will pay up close to 5, 6, almost 7%.
So let's just review how
Bao.
this works.
Yeah.
Depositor puts his money into Bao. Bao turns around, aggregates those deposits, and effectively passes them on to a bank that is prepared to pay, let's say, 7% for them. So Bao can turn around and pay the original depositor 6%.
Yeah, that's more or less it, except you called the person who puts the money into Bao a depositor. Technically, that's not true. I mean, the cash can be withdrawn on demand, so it looks like a demand deposit, but it's not regulated like a deposit. So that's somewhere else where Bao and Alibaba are disrupting things.
This sounds like the sort of thing that should scare us in a market, China, where we hear a lot about credit bubbles. This looks like a sort of indirect workaround of regulations paying high rates that could lead to a liquidity crisis later. Is this something we need to worry about?
Yeah, I mean, one way to deal with a credit bubble forming is to force greater sort of market pricing and discipline on banks' cost of capital, which in a way is what Bao is doing with his interbank deposits. So maybe that's a good thing, especially if you think the liberalization of interest rates in China has to happen and is a good long-term thing. But like you said, it's also a workaround because those interbank deposits don't get treated as part of banks' loan deposit ratios, so it looks a bit shadowy. I mean, not as shadowy as those wealth management products and trust products, which you kind of hear about all the time as having sort of bad assets and quite hard to figure out what place they have in the system. So it's a mixture of the two, really. There's some good stuff here, but it's also we have to kind of look at the risks as well.
Thanks very much.